Hi traders, thanks very much for tuning in. Matt here. Today I'm going to be walking you through three currency pairs which I am watching in the next few hours and days to be taking a position on my brand new Darwinex account. Now, if you haven't heard who Darwinex are, don't worry, I'm going to give you a short rundown now of who they are to bring you up to speed.
Darwinex Zero is a bit misunderstood because people lump it in with prop firms, and it really isn't one, at least not in the way that most people think about prop trading. At its core, Darwinex is much closer to a modern asset manager. Instead of selling challenges or betting on people actually blowing up their accounts, they are focused on turning trading strategies into investable products. You trade in real market conditions, but with virtual capital, and your performance gets turned into something called a Darwin. A Darwin isn't just your P&L, it's your strategy packaged into a risk-controlled, investable instrument that other people can actually allocate capital to. The clever bit is their risk engine, often called deleverage, standardizes risk across all strategies, so whether you're aggressive or conservative, your performance gets adjusted to a common risk level that makes different traders comparable, and it protects investors from hidden leverage or blow-up risk. This is exactly the kind of risk normalization that you'd expect in a professional asset management setup, not in a retail prop trading firm. That's the big difference. So prop firms are basically running paid challenges and internal rule sets, whereas Darwinex, they're building a marketplace of strategies where capital flows to traders based on real risk-adjusted performance over time, not on passing a simple prop trading test. On the regulation side of things, Darwinex itself is a UK regulated company under the FCA. The execution and the investment side sit inside of that regulated framework. Darwinex Zero, the subscription side, is about giving you the environment to build a track record, but the underlying infrastructure is institutional grade and regulated. So it's like a clever hybrid where you're essentially able to access building up a trading record, a track record, without having to put your capital forward. If you then wish to put your capital up for risk and manage your own account, then you can stop paying the subscription fee each month, and you are simply moving your old track record over from your Darwin on Darwinex Zero over onto your Darwin on Darwinex. So that might seem a little complicated at first, but ultimately it's just trying to make building up a track record more accessible for a small fee. But if you can prove your risk-adjusted returns are consistent and positive over a number of months and years, then anybody, in essence, can become a tradable asset who can have money allocated to them, much like a stock. You even receive your own ticker. In my case, it's BYLL, Bill, and it makes anybody have the opportunity to become a fund manager. So in simple terms, Darwinex Zero isn't about can you pass a challenge, it's about can you produce a strategy that deserves capital, and then letting a proper risk engine and a real marketplace decide that.
So today I'm going to be taking you through those three trades. I don't know what my first trade is going to be, but I am definitely taking it very seriously. I want to create a track record that I can stand by, that I've built in public, and I'm so serious about this that I have actually sought out the help of professional trader, qualified wealth manager Charlie Burton, whose YouTube account I will link in this video. So if you haven't already come across him, go and check him out. He is a top bloke as well as being a top trader. So without further ado, let's jump into the charts and have a look and see what we've got. So first up is the US dollar Swiss franc. Now, this is an interesting one because it's currently in a wedge and it's right about to break out, I think. It's certainly going to have to pick a direction sooner or later. It can't keep going into this area and just disappearing. It is, after all, a major currency pair. So let's just zoom out. Let's just look at the monthly chart, and I'll try and show you, make some sense of all these squiggly lines on my chart, and hopefully you don't find them too crazy to look at. In this sort of burgundy colour here, we've got what I call horizontal key levels. They are what you might know as supply-demand or horizontal trend lines, whatever you call them. they're basically areas that historically the market has respected, whether that's to the upside, to the downside, or where it's found a constant period of consolidation and then decided to move. So what I do is I draw these lines on using the monthly charts. I find you can get a lot clearer idea of what's going on these charts. And I have to remember as well, these lines, they're not specific. They're more like areas. They're more like zones going across your chart. And if price enters this zone, you just got to be a bit more aware of how, on a lower time frame, like the daily or the 4-hour chart, that something more significant might happen in this area. So it just sort of puts you on alert. So looking down on the weekly charts, it's been sort of steadily moving downwards. I think we can all agree that from left to right, this price moves down, right? And that's been happening since, well, that's 2022. I think it's probably even longer than that. Well, no, it's stayed roughly around. It's been quite consistently level from the early 2020s through to 2022, and now it started to move down. It's found consolidation in this area here, which you can see more clearly on the daily chart. Here we are, the daily chart ranging here in between these two levels. You can see that the moving averages have started to move apart, and when that happens, I tend to think that it indicates things are speeding up a little bit into that direction. They've broken out of consolidation. It's like the visual representation of price moving apart at a speed that sort of takes the moving averages by surprise almost. And it's currently formed this little wedge. And now let's look at the 4-hour chart just to get a clearer sense of how that wedge is taking shape. So it's entering, the moving averages have now caught up. We are just beneath this key level here, and we're obviously waiting to break out of this wedge. Now, for me, one of the important things I look at to let me know what direction I'm going in the market is I have a MACD on the bottom, and this bottom one here with the funny green and red bits, this always shows me what the weekly MACD is doing, and I take the signal line and the MACD line, and when it's red, I'm looking to take shorts, and when it's green, I'm looking to take longs. So currently, since this wedge started to form, I've been looking to take short trades. So I'm really on the lookout for a short trade to break out of here, or to pull back potentially to the 200 or even this horizontal key level, and then, you know, I can get in after maybe like a bearish engulfing candle, let's say, or a negative cross of the MACD on the 4-hour time frame or the daily time frame. So that's what I'm looking at with the US dollar Swiss. Moving on, we've got another interesting one. I'll zoom out once more. We'll look at the pound yen. So the pound yen, it's right up against this monthly key level. It's a pretty strong key level as well. It's respected it over time quite a few times. And on the weekly charts, we can see that there is a bearish divergence. So what do I mean by that? I mean that the MACD is moving down from this high to this high, whereas in that same period, the price is moving up. So the price is diverging, it's moving up, whilst the momentum indicator, the MACD, is moving down. So we've got a moving apart, a disagreement of indicators with price. And again, we've got another divergence here from there to there, where the MACD goes down, but price goes up. So a double divergence for me is quite a strong signal that we could be facing some sort of turnaround in the trend. Now, clearly, this is the weekly chart. The pound yen is in an uptrend. Again, we cannot question that. But trends slow down and they start new trends. So let's look at the daily chart just to get a clearer sense of what's going on in the daily. It's basically not much changing. The price is entering the moving averages. We're still near this area of horizontal key level. and we're still in the territory where, you know, the MACD is negative. So I am waiting for something bearish to happen here. I'm looking for a bearish engulfing candle off that horizontal key level. I'm looking for a cross down of this MACD on the daily, or maybe even on the 4-hourly chart. That might be enough to get me in, but probably the daily chart. And then hoping that we see the start of a nice new downtrend for the pound yen. Thing to look out for there will be overnight fees and things like that. Trading yen pairs, sometimes they can be a bit higher in my experience, but I could be wrong. I will check it out. So the last one I'm looking at is the euro dollar, the most liquid currency pair available, and it's one of those situations where it's been moving up recently in a nice strong trend, but it started to slow down. It started to catch up with this trend line, which has quite clearly formed, with lots of bounces on it, and it's meeting up with all the moving averages. And for me, when all the moving averages start to cluster together and price starts to meet up with them here, it's generally saying something's about to happen. It's like a volatility contraction pattern, but on the chart, not on a volume bar at the bottom. It's just everything coming together, same as with a wedge, same as we saw on the US dollar, Swiss franc. Things are just starting to slow down and wait for an explosion. So hopefully we can trade to the euro dollar to the upside, because my MACD is telling me that I'm only taking longs, and I respect that to the hilt. I'll talk more in another video about why I respect the MACD more than any other indicator. But yeah, those are the three that I'm looking at to take my first trade on BYLL, Bill, my brand new Darwinex account. And hopefully with the help of you guys keeping me accountable and Charlie Burton mentoring and training me along the way, I'll be able to put together a solid track record in the currency markets. Anyway, thank you very much for watching this video. If you enjoy the content, then please hit subscribe and also hit the like button, because that will help my videos in the algo. And I'll catch you guys in the next video. Thanks very much. Bye.